Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq Stock Exchange. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Tuesday afternoon, we have Shawn, Cruz, manager of trader services at TD Ameritrade, to discuss levels in the Nasdaq-100 and Nasdaq Volatility Index, of course, the VOLQ, and we'll touch on Netflix earnings happening after the close today, this January 19th. Shawn, let's take a look at your first couple of charts with fresh levels in the Nasdaq-100 and VOLQ.
Yeah, looking at VOLQ and in Nasdaq-100, it's sort of just taking a step back. We continue this sideways trend, and a lot of investors and traders are asking themselves if maybe this means there's going to be some sort of a pullback or any sort of breakthrough and maybe some support level not holding, and it just really doesn't seem to be showing up. And the VOLQ is really the first place I go when I try and look and engage market sentiment, at least for these Nasdaq 100 companies. And you actually see it's still remaining sort of at the lower end of this range. It's been chopping back and forth in. So if there was any major concern that there was going to be some sort of a significant pullback, I would at least expect to see VOLQ rising somewhat. And we're just not getting that at the moment. I think that makes sense if you're thinking about just all the earnings that we have coming up, some really big companies that are not only just major components of the Nasdaq 100, but a lot of the other indices. And I think investors really want to see what management is going to say moving forward. Now, looking at what's been going on just in terms of projections and what we've gotten from guidance, the bulk of the companies out there that have been offering positive guidance have actually come from the information technology sector, which would sort of favor those Nasdaq 100 type companies. So I don't think, at least for the time being, we have any sort of significant turn lower from management in terms of expectations. But I do think they are going to want to get sort of a refresher on exactly where some of these companies are at. And for the companies that maybe weren't in a good spot to put out projections over the past couple of months or the past year, maybe if we can actually get some management projections put back in place, that would be another big development, I think, for the industry. And I think that is what investors are waiting to look at. But if we kind of drill in here a little bit and take a little bit more of a short-term look, we've seen the Nasdaq chop sideways before it makes another leg higher, and then it chops at that price level again. And we've seen that happen about 3 times over the past 20 days or so. And right now, I'm really looking at some price levels down around, I'd say, 12,800 and going up to about 13,040. I think is the range we seem to be chopping in right now. And I think that's really going to hold here until we at least hear from some of those big components that have a pretty hefty weighting in the Nasdaq 100.
Well, let's talk about Netflix. It's the first major component to kick off Nasdaq 100 earnings today, January 19th, after the close. You always go to the options market to see what implied moves could potentially be in the stock price following that earnings print. So what are you watching here for Netflix?
Yeah, it looks like right now, looking at the options pricing, there's about a $30 range in either direction that they're expecting Netflix to trade in between. And so that puts you right at about 536 or 476 for Netflix post earnings. And I think this is a company that is sort of a good example of what we just discussed. They had just absolute gangbuster subscription growth over the past year. There was this concern about pull forward. There was also concerns about profitability and cash flow. And I think right now it's going to be churn. There's a little bit of an expectation out there that there could be a slowdown somewhat in North America, but that's actually expected to be offset by some of their growth internationally. And then also, I think investors are going to want to maybe take a look and focus on maybe some of those cash flow related metrics moving forward. But it's certainly going to be interesting to hear not only how this past quarter went, but hearing guidance from management is something of the recurring theme I expect for a lot of these tech companies that had a pretty great year in 2020.
Yep, I would argue all companies, investors are looking for some guidance there, Shawn. Great stuff as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.